Welcome back to the watch list. The Fed's preferred inflation gauge and the July consumer sentiment print are giving us a look at the state of the U.S. consumer. For some insights into what it means for the markets, let's bring in our panel. Rebeca Walser is president of Walser Wealth Management, and Eddie Yoon is partner of Grayspace, co-founder of Category Partners. Eddie, Rebecca, so good to have you here. Rebecca, you're here with me at the desk, so let's start with you. And before we actually get to the consumer and this PCE print, I want to ask you about the market, because I was taking a look at your notes and you say investors should brace for disruption. Tell me how this disruption could play out.
Yeah, well, obviously, we're looking at Germany with depression level manufacturing. They have they have a lot of energy problems that they stopped with the nuclear and everything. So when you see what's happened in China, what's happening in Japan, what's happening in Germany, because we're the official reserve currency of the world, we can export our inflation, but eventually it will catch up to us. So as we see the East, Europe, coming down, then we expect it to come here. So I know that we're getting good consumer sentiment. I know they're happy about potentially a rate cut that we're going to get next month, and all that's great. But I still believe that disruption is ahead this year, especially with the election so close.
And disruption meaning?
Well, geopolitical, certainly. I mean, I'm certainly worried about that. Election, potential things going on there. But as far as the actual economic market, I'm just worried about news out of Asia and Europe still impacting us and not really being ready. We don't have the foundational fundamentals to brace for something like that right now.
Okay. All right. So Eddie, let's bring you into the conversation and focus on the consumer, because that soft landing narrative really is holding strong. We had a little bit of a blip on the radar at the start of August, but otherwise it seems like investors are pretty confident the Fed is cutting rates and that potentially achieving this soft landing. Yet earnings season has really pointed to a very mixed consumer. So how would you describe the state of the consumer right now?
Well, I think more than one thing can be true. So everything that was said before, I do agree that there are macro factors that could be destabilizing. What we're seeing in the data is that discretionary income expenditures are holding flat to slightly up, consumer sentiment slightly higher. And when you deconstruct it, I think we're getting more of the Rubik's Cube solved, actually. So the thing that makes me quite bullish on this is that business travel is actually up. So global travel is up 8.5% from a TSA travel perspective for August 24 versus 23. But global business travel is finally, for the first time since 2019, exceeding those levels, according to the GBTA. And that's really promising, because it's really been the consumer that's been holding up the economy to this part. And that the B2B sector needs to do its part by investing more. So travel is a good sign, because that means that hiring can tick up and wages can go up. And if that's the case, then that's going to be good. And then the other thing is that I'm starting to see much more pinpoint sources and root causes for inflation, which gives me positive signs for the rest of it. So we know that if auto inflation hadn't been up 18.6% year over year, that it would have actually knocked a half point off of inflation for the entirety of the month of July. So what we are seeing is that people are not driving nearly as well as they used to. So speeding violations are up 20% since 2019, and collision severity is up 40% since 2019. So that needs to work its way through the system as well.
So Eddie, just quickly, how soon of a response do you think that we would see if consumers are seeing this light at the end of the tunnel with the Fed about to cut rates? How soon could we see a more confident consumer that continues to spend after the Fed actually cuts?
Well, I think you're starting to see it in category by category. So I think it's definitely true that certain categories will feel disruption. So, for example, consumers are kind of making their own pinpoint decisions. So they're smartly trading down. So restaurant spending is actually down 0.7% if you factor in kind of the pricing inflation on the menus. And Walmart same-store sales are up 6.4% last quarter. Target's up 3% year over year. So people are buying more groceries. Netflix's ad-supported price tier, so the lowest level, is up 34% year over year and accounting for nearly half of all new signups. So you're actually starting to see that the consumer is trading down and making smarter choices as a bridge to when that light at the end of the tunnel comes.
All right, so Rebecca, I want to bring you back here to get your thoughts on the actual consumer, but also in terms of disruption with this Fed rate cut.
Yeah.
I had an economist on the earlier show saying we could see a 75 basis point cut. How disruptive could that be
Oh,
if,
wow.
if it spurs some concerns that maybe they're doing it because we're heading into a recession?
To Eddie's point, Caroline, this is such a weird dichotomy of an economy. So you're seeing consumer sentiment pick up, but we know that the customer is leveling down, to your point. Like with the Target and Walmart are doing well because luxury is losing and they're going to Target and Walmart. So the consumer sentiment might be really, excited about this rate cut. But I got to be honest, if we get a 50 or anything above a 50, that sends ripples on the economic side of something is more fundamentally wrong if we're having to cut at 50. And these numbers don't go with that. The consumer sentiment feeling, even the unemployment at 4.3, we see, to Eddie's point there, that businesses are starting to spend and that the R&D and the travel is coming. So hopefully, even though we have seen a weakening and we did have that $818,000 jobs retraction from last week, we know that labor is soft, but a 50 basis point cut or larger is a bad thing for us because it really indicates that the Fed is worried about something else that's much more detrimental than just high rates.
All right, we have to leave it there.
Yes.
Rebecca, thank you so much for joining me here at the desk. Eddie Yoon, thank you so much as well. All right, that's going to do it for the watch list.